LiteFinance, the world of financial freedom.
Hello guys, it's Monday 9th of January. It is time to start the market forecast. As usual, we will start with a macro calendar and then we will switch to a summary of fundamentals, and this time for the US dollar, since we had FOMC minutes last week and this week we have CPI. So let's begin. And on Monday we will have Tokyo CPI data from Japan, which will be published during the night from Monday to Tuesday. So next day we have Powell's speech. On Wednesday, only crude oil inventories will be published. On Thursday, CPI data from the US. So as you can guess, this will be the most important day of the week. On Friday we will get data from the UK, namely GDP and manufacturing production. So for 3 of the last 4 years, traders have only made money thanks to pessimistic Euro-USD forecasts. So let's see what happens this time. According to Bloomberg survey, the most bearish forecasts were $1.1 for 2019, 1.15 for 2021 and 1.05 for 2022. All of them were close to reality. At the same time, the consensus estimates had nothing to do with the real numbers. Curiously, during the pandemic in 2020, optimistic forecasts were profitable. Optimists are betting on 1.15 at the end of 2023, while their opponents expect the pair to decline to 0.97. So the median forecast is 108. If nothing extraordinary happens in 2023, the actual performance will be closer to the consensus estimate or the bull's opinion. The Fed is ending its monetary tightening cycle, while higher European inflation forecasts suggest that the ECB will raise rates longer than the US Central Bank. Most are already expecting a recession. However, it started in the Eurozone, which has already been priced in quotes, but not in the US, which is bad for the US dollar. The USD has not yet felt the full negative impact of the destruction of American exceptionalism. The fall in gas prices in Europe to pre-war levels suggests that the inflation slowdown in the currency union may occur faster than expected. So this will tie the ECB's hands. On the contrary, US inflation may begin to grow against the backdrop of a strong labor market and high prices in the service sector. So in this scenario, Euro-USD may fall to the zone of 103 to 104, if not even lower. So will the pessimists take over again? I hope this doesn't happen. Most likely, Euro-USD will fluctuate a lot. I expect it to fall to 104 and then recover to 1-1 by the end of the year. However, this requires a strong labor market and accelerating inflation in the US. We already know that we had a pretty good NFP reading, so this might be the case. Strong non-farm payrolls data and average wages will make it possible to add up to Euro-USD short trades entered at the level of 1061. Okay, that will be all for today. Thank you for watching and I'll see you next week.